Good evening, Trade Algonians. This is Brian Mitchell, your day trader of Trade Algo. I host the live session for Day Trade with Brian all day long, and this is where I drop trades. However, I do not recommend taking my trades unless you know rules. Scalping is a faster form of trading. Ladies and gentlemen, not all trades are created equal. I get this quite often that people just think you can hop in trades late, hop in trades whenever, hop in trades and they'll continue going. I just want to be clear for all our new watchers that that is not the case. Scalping is a faster form of trading, therefore a more dangerous form of trading, and because it's more dangerous, requires more risk management. So this document explains, how we take profit, what things to do, things not to do. In the Day Trade with Brian chat, you should not take trades late, jump into trades and not monitor them, chase a position, rinse and repeat, average in just because it's down. I see these mistakes happen quite often. And take trades on time or not at all, or be able to, and also speed of entry. So let's go over our market analysis and see what happened on Friday, because Friday was wild. So FOMC definitely gave us some volatility. I want to go to the VIX first because this is definitely worth mentioning. We skyrocketed in volatility. So you can see here that we probably did like 100% shift. We went from 15 all the way up to almost 30. And this is the VIX, the volatility index on TradingView. I don't know if you guys use TOS but this is TradingView, so you guys can adjust it however you see fit on whatever platforms you use. But nonetheless, you can see that it pretty much went up 100%. Now, the higher the volatility, the more you're going to go past your supports, and the more you're going to go past your resistances. So say, for instance, this is support, just as an example. So expect it to do something like this, and then come back up before the close of the candle, and then use it as support and go back up. Similarly for resistance, expect with high volatility for it to go up, and then come down before the close of the candle. So it's really, really tough to trade with high volatility. It really, really tests your mettle, your emotions. It tests your ability to hold. Because this, on the charts, while it doesn't seem, let's just say, for instance, this was not the VIX, and this was resistance, and it went up. See how it went up for a little bit, and then it came back down? It doesn't seem like that much, but on the charts, this could equate to a minus 70, minus 90% on your options trade. For you to be able to hold and say, I trust my resistance, I just know that there's high volatility, and it will respect resistance before the end of the 4-hour candle, is not the easiest thing. In high volatility environments, your patience level should already be high for the hard market we're in. But with high volatility, it has to be triple or 4 or 5 times what it already is. No exaggeration, no embellishment. And most newbies cannot hold through that, right? Now, the newbies that just start averaging in with no rhyme or reason, they might get lucky, but that's not a good strategy for markets. Why are you averaging? I don't know, it's just down. That's not a good strategy. You have to know what you're doing precisely, because trading requires, ladies and gentlemen, I should probably always, for these sessions, get out a little bit of a whiteboard. No, I don't want to do that. Something that I do try to hammer into my students is trading requires 3 things, ladies and gentlemen, before I get to SPY and before I get to Qs and Bitcoin. Trading, to be successful, requires precision. You need to know where your support, your resistance, why you're longing, where you're longing. What's the reason? What's the strategy? What's the edge? What is the thing you're doing that should win at least 65% of the time with proper risk management? What is it? You should be precise with your entries. I'm longing because this is a weekly support. I'm longing because this is, yesterday's low on SPY. I'm longing because it's a breakout candle, closed candle outside my bullish wedge that's been respected for 4 weeks. Whatever it is, you need some sort of precision in trading, or an edge is another way to say it. I like the word precision because I like being precise. I sometimes get in trades to the exact penny because I know where support is, right? And here's where most people screw up the most. And I'm going to say this as politely and respectfully as I can. Sometimes the truth hurts, but this is the truth. You need attention in markets, guys. This is why we get a lot of traders that say, I want swing trades. Where are the swing trades? I can't pay attention in the market. Even in a swing trade, you still have to pay attention. Because let's just say you get in on a bullish wedge and resistance is right here. If you are, not watching that here's your exit and it comes back down and does something like this, you had a brief window to get out from entry to target. You can't just hold and expect it to just keep going, because I don't know what the assumption is for beginners and new folks that are trading. They just think, I get in, so it should just keep on going because it should just keep on going regardless of my schedule and my attention to markets. So that's why most people like swing trades, because they think, they assume that they don't have to pay attention to markets. That is incorrect. And you also need focus, which seems like the same thing as attention, but it is not. You have to be able to discern certain things on charts, timing, position sizing. Like, for instance, let's just say you get into a position, but your focus is off, so you get into a large position instead of a small position. You put in a 111 contracts instead of 11 contracts because your finger slipped. You need focus in markets, right? Which is similar to attention, but it's a more, in my opinion, it's a more precise form of attention. It's precision plus attention equals focus, but for the purposes of this, so attention and focus is something most people don't want to give to markets. But you need this, ladies and gentlemen. You need attention and focus in order to be successful, even if you're investing. Most people invested into Bitcoin in 2017, watched it go from like 10 to 17 to 18 to 19 to 20,000, and then they rode it all the way back to down to 3,000 because their attention and focus was lacking, right? They were waiting for someone to do it for them, but that doesn't work. My job is the precision factor. I will tell you the entries. Your job is the attention and focus factor. If you do not have attention and focus, I won't say it's impossible, but it's going to be very difficult for people to be successful in the market, guys. So you have to ask yourself a really personal question. Do I have the attention and focus to give to markets, especially trading with Brian the first hour of trading, and then I can carry on with my day? Because that's really where we get 90% of our trades. Especially now, why do I bring that up? It's not to, just yell at you guys or admonish. It's because look what the VIX is doing. This requires even more attention and focus because of how crazy things are going to be moving on the charts. So I want you guys to ask yourself the serious question: can I at least give 60 minutes of attention and focus the first hour of trading if I'm trading with Brian, right? Because we ended up another green week. I think this is like our 10th or 12th week. Green. Like, I've been very, very transparent with all my official trades. If you guys take high risk trades and trade ideas and enter and you have no idea why, that's on you. But official trades only are 100% green for the last 2 months, guys. Not 100% success rate, but I'm saying overall performance week after week is 100% green on a weekly metric. So let's go into SPY, because SPY is a little bit interesting. SPY had a huge drop, a massive drop, and there was no way to know that this was the top. It was just a catalyst that pushed us into relative weakness. But I want to note something really quick. Let me go to the Technical Analysis Bible, which is on page 1, section C of the document I post 1,000,000 times a day in the chat. These are rules that are evergreen for technical analysis, and all of them will be respected under one condition: as long as the market's neutral. If there are emotions guiding the price action, say goodbye to Rule 1, Rule 2, Rule 3, all the rules on this Technical Analysis Bible will turn to crap. If fear is guiding the market and pushing it down nonsensically, say goodbye to your 2, 5, 15-minute supports, your 1-hour supports, your 4-hour supports. They're all gone, because fear is a stronger emotion than and it's true in life, guys. Emotions are stronger than logic when they're running high. Do you want to get in a fight? Do you want to argue with a drunk? No, your logical arguments are worth nothing to somebody that's highly charged, right? It's the same thing. It's the markets represent life, the psychology and emotions of the market, right? So bad news from FOMC, it's going to push us into fear, and then people just fear sell, and all the other rules of this are crap. We're not going to test the support, 1 or 2 times before we break it. We're going to break it on test 1 or 2, because we're relatively weak. And I recommend reading this every single day. So what happens when the market is weak, or if the market's super strong? If there's good news, inflation is finally coming down, and there's a good metric, and there's optimism. Say goodbye to your 2, your 5, your 15-minute, your 30-minute resistances, your 1-hour resistances, your 4-hour resistances. They're all gone because euphoria is going to punch through. So it doesn't matter if it's a bad emotion, fear, or a good emotion of euphoria and optimism. Emotion nonetheless will water down your technicals, right? So what do we want to do when your technicals are watered down? You want to make them stronger. So there's a rule right above this one. They should go hand in hand, which is why I put them next to each other. The bigger the time frame on the charts, the more respected or reliable everything is going to be on your charts. So I want to read this carefully, guys. So our job as traders to understand if a stock or the market we're looking at is neutral, no emotions guiding the price action, right? If there's a sell-off due to fear, panic, bad news, or euphoria, relative strength to the overall market, emotion will water down your technicals. So how do I make them stronger? Increase the time frame. Bigger the time frame, the more respected or reliable things are going to be in a watered-down market because of emotions, right? I do realize this session is going to be a little bit longer than our normal 3, 4, 5-minute sessions, but I do want to explain, because I feel like a lot of people wrecked their accounts on what was it, Wednesday, and then they came into Thursday and Friday, even though I gave winning trades, because they jump in and their emotions were high, and they decided to over leverage themselves. They decided to not follow instructions. And again, when emotion is rampant, logic is absent. When logic is absent, it's because your emotions are high, right? So if you are a person that gets very emotional, sit out of markets. You do not want to ever trade emotional, right? You don't want to join the herd and join that nonsense. So let's get into SPY now that we kind of understood. VIX was high, so you're going to go way past your supports, and you're going to, emotions are running high. You have to know what's going on in markets to kind of balance them, right? So there was a weekly support right here. See this purple line right here? It's 584.58. On the 18th, and it looks like the 21st and 22nd, we bounced, and then we went up here for several days. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Like 4 weeks we were up here. Now, if you read the Technical Analysis Bible every single day, you would know one of my favorite rules, and we go over these on our live streams at 10:30 a.m. Eastern. Those are cryptos, don't worry about it. The first touch of a major support. A major support could be weekly. I just covered Rule 3. The bigger the time frame, the more respected things are. I definitely consider weekly supports major supports. Even better, monthly supports, right? The first touch of a major support, or first touch in a while or a long time, is always the strongest bounce. So for SPY, hold on, I have to mute music. We haven't tested this in a while, see? We haven't tested this for 4 weeks, so it's definitely been a while or a long time, and that is a weekly support. So both those conditions were met. The first touch of a major support or first touch in a while is always the strongest bounce. However, these rules go hand in hand, which is why I put them next to each other. The bigger the time frame you're making a trade from, the wider you have to make your stop, or the more room or time you have to give your trade. Let me show you what happened. So we came down, and see how we pushed past this weekly? It eventually did come back up and respect it. This is the room or time you have to give your trade. So if you were in calls right above this, slightly above this weekly line, and you're expecting this kind of move, because it's been 4 weeks since we last tested it, and again, it's a big time frame. It's more than likely. I can't say for 100% fact. There's no such thing as certainties in trading, but it is reliable. It is more reliable. The weekly is more reliable than the daily. The daily is more reliable than the 4-hour. The 4-hour is more reliable than an hour. The bigger the time frame on the charts, the more respected or reliable, in capital letters, a support is going to be, a supply is going to be, a simple moving average, an EMA, a head and shoulders pattern, whatever, guys. So it's interesting that it did go past it, which again, you have to give your trade room if you're going to use bigger time frames, and then did eventually respect it. Now, I do kind of, if we are to go lower, I think we're going to test it a few times before we go lower. What do I mean by that? Rule 2, the more we test the support, the more likely we are to break it. We typically break through on test 3 to 6, again, if there's no emotional catalyst pushing us down like FOMC. So you can see that kind of started happening over here. Test 1, test 2, test 3, and then just bounced off when we never saw it. But this was looking shaky for a while because the more we test the support, the more likely we are to break it, and it didn't break it. We were actually on test 3, which was letting me know back then, about a month ago, it's possible we might break through. The more we test the support, the more likely we are to break it. We're typically break through on test 3 to 6. We got to test 3 and then we bounced up and never came back. So if we are to go lower, this is test 1 because it's almost like we're starting off fresh. This price action was a month ago. This is not test 4, right? It's almost like the time resets. So now we're testing at 1, 2, 3, 4, and then we bounce through, something like that. Now, if there is another catalyst, like some economic numbers, yeah, we might break through on test 2 because we're in relative weakness. So for now, I do expect 584.58, 58458 to hold, this is a weekly support. So it doesn't matter if we're down here for 1, 2, 3, 4 days, and then we finally pop up on Friday. That doesn't matter, guys. It's a weekly support. So it can hang out here the whole week and then pop up the last day of the week. It's a weekly support. So you have to be prepared if you're taking bigger time frame supports or bigger time frame resistances to hold the duration of the candle. This is a weekly candle, a weekly support. You have to be prepared for your contract to go worthless and hang on for 5 days and hope that it gets back in the green because you trust your time frames, you trust your lines on your charts. It's not an easy thing to do, to exert that patience and have a system, which is why I beg people to read this. I beg and plead, and I think it falls on a lot of deaf ears, but a good 5-10% of you guys are really, really diligent, and I know who you guys are, so thank you so much for indulging me and humoring me. So that was SPY. It does have a daily support at 58573, 58573. So the daily support and the weekly support are super close to each other. I think what would make me nervous holding on, if say I longed at 58458, which is the weekly, is if we lose the daily. If we get a daily candle close underneath 58573, then it's not impossible that the weekly will hold. It's just the chances increase because, again, I'm going to respect the weekly support over the daily. So even if we lose the daily support, the bigger time frame usually wins. The bigger kid always beats up the smaller kid. The 12-year-old is going to beat the crap out of a 9-year-old, but the 9-year-old might get in a couple shots before the bigger kid knocks him down. Does that kind of make sense? So SPY, even if we do close underneath that daily support, say we close right here underneath 58573, we're probably going to stay there another day or two and still respect the weekly support and then move on up. I know this is getting into deep into intermediate land. It's not a newbie friendly session because unless you come to the live streams every day, then it's going to be this might go over some people's heads, but I hope it's not. Q's pretty much same thing. There was a weekly support at 514.16, 514.16, 514.16, and the same thing happened. We got bad news, dumped past it, and then reclaimed it before the end of the week, right? We rejected from the 10 simple moving average on the weekly, so this is resistance, this is support. We kind of ended up in the middle. That's usually where market makers love putting us and then keeping the price action in the middle so that they could take newbies' money. I long at support and I short at resistance. That is my rule 1, actually, in my technical analysis Bible. Buy calls at support, buy puts at resistance. If a stock is not at either, I simply don't trade. I don't care what happens here in the middle, me personally, right? But most people see candles moving here on lower time frames. They're like, what do we do with this? I personally don't care. If we're not at resistance and we're not at support, I personally don't trade it. So we'll see what happens. If we keep on testing this and testing it, then we can maybe expect lower. If we keep on testing this resistance, testing it more and more, we can maybe expect higher. There is a little bit of congestion here where we started consolidating, so I do expect that to be somewhat of a resistance. It's not just a simple moving average. And we can chop here the rest of the week. So I'm going to have to start looking at lower time frames for trades. How they left the daily candle, is a little suspect. It's a little weird. So I don't have a bullish or bearish bias. That's really what I'm getting at with SPY. which represents the S&P 500. It's the ETF for the top 500 companies of the stock market. And Qs being a little bit more tech heavy than SPY. You can easily Google what is QQQ made up of, and you'll see that it's more tech heavy, right? It's more Mag 7 propelled, right? Which is basically 30-something% of the market, which is insane. So right now, Q is pretty neutral, SPY pretty neutral. The last thing we'll go over is Bitcoin. Bitcoin, I went over this last week, which is pretty interesting. The 4-hour trend line is likely to hold. This is wild to me that we have it's weird that a 4-hour time frame is holding, but not weekly and monthly time frames. So this has got to be something on Wall Street's radar. I don't understand why this price action over here was so significant for this trend line to really be respected. But you can see here that I just drew from this body of this candle to the body of this candle. We got a breakout right here, so we went up, and then we retested it, bounce, retested it, bounce, retested it, bounce. And this would just be another retest before another bounce. So I am anticipating, some bearishness until 92,000 to around 91.5, maybe 90,000. These are where I have some buy orders. Definitely 92,000, and then I'm going to probably average into around the 90, maybe even the 80, high 80s. Because look what happened here. We went all the way from 103,000 to the low 90s, 90,000 in one swoop in like half a day. Just boom. So that can happen over here, guys. That can go all the way down to 86,500 and then come back up to like we did over here, boing, something like this. So that is on the table, which is why I have orders to average into a position. Let's just say, just for conversation purposes, I jump into a $100 leverage traded position here, add 150 here, and then over here is where I put the big mama position, the $500 position, which is pretty much, really pushes me in the green very quickly. And these two positions, they get into the red, don't hurt me as much, because once the trend line is reclaimed after the bounce at what I believe is going to be the low for the next couple months, at least, I'll be okay. So a lot of people just average just because their contract is down. That is not the correct way to trade. That's called gambling. That's not trading. If you ask somebody why did you do that and they can't give you a proper response with precision in their statements, if they're not concise and succinct, they're gambling. They're just hoping, wishing, praying. That's not a good strategy for markets. Why do I say that, guys? Because markets are filled with billionaires, banks, hedge funds, and most importantly, machines, algorithms. You're playing with pros. You're swimming with sharks. Do you think sharks are going to allow you to just keep on averaging and just because you don't have a reason? So, guys, you're playing with pros. That's like saying, I'm excited to make money in the NFL. I just got a position. I don't know any of the rules, but I'm just going to jump in, right? You're probably going to wind up in the hospital playing without knowing what's going on, right? So just some things to keep in mind, guys, this week. Last time I did mention before the bounce happened here, and it did play out beautifully. I wish Trade Algo traded crypto, but we can't teach you guys how to circumvent the law. Tell you, hey, here's how you use a VPN. Here's how you leverage trade, because the U.S. doesn't allow that. So a lot of people give me that question. Why don't we trade crypto on Trade Algo? Because we cannot make you guys criminals and endorse that or condone it. so guys, the reason why I mentioned Bitcoin is because some of you guys watch that market, so I'm kind of just talking about the equity by itself, but also you can apply this to MSTR. MSTR is pretty much like, it follows whatever Bitcoin's doing. Bitcoin's having a good day, calls on MSTR are going to do really well. Bitcoin's having a bad day, puts on MSTR, MicroStrategy, Michael Saylor's company, is going to do pretty well, and that's kind of been the talk of the town. And I know people love chasing things based on news. I don't, but I'm just putting it on your radar. I'm trying to make this a one-size-fits-all for everybody. All right, so that's what I'm looking for tomorrow. If you guys have further questions, you guys can email me at brian@tradealgo.com, BRIAN@tradealgo.com. And I'll see you guys tomorrow. Let's see how everything pans out. Obviously, candlesticks in the markets is like, to me, like Wheel of Fortune. The more letters that pop up on the screen, the easier it is to solve the message. As of right now, I need more candles to solve the phrase, like Wheel of Fortune. So SPY and Qs are neutral. Let's see what the candles tell us to see if we're going to start breaking towards support or resistance, higher or lower. All right, guys. So that's it for me. I hope you guys enjoyed this video. Let me know in the comments if you liked it, if you liked the style, or what else I should cover. If I should speak slower, if I should explain things more. I'll put the Technical Analysis Bible in the description, and I'll see you guys tomorrow. Everybody, as always, have a wonderful and blessed day, and I'll see you soon.